Hi, and welcome to our 2024 year in review. I'll be here discussing industrial and self-storage activity over this past year and what we can expect moving into 2025. In 2024, we went through what we are calling a price discovery period. A lot of the comparables and previous sale activity and leasing activity that we had seen through COVID 2021, where cost of capital was record lows, we moved out of that period and obviously into a state of elevated interest rates and a stagnant market. So 2024 transaction volume dropped over 70%. This is the case in several markets nationwide. And so it was a year of patience, of scrubbing the market to get deals done, and some leveling off in terms of rent growth and stagnation in terms of investment activity. So moving into 2025 in the industrial sector, we're optimistic because we have a lot of industrial land becoming available, which was never the case in years previously. We have infrastructure moving west and east. And so we're going to have a lot more opportunities for industrial occupiers to find their kind of perfect location, build what they need. Developers may be more open to speculative development for a lot of the leasing requirements that are out there for some large industrial occupiers. So more product will be coming to market, meaning more options for tenants and hopefully some more room in some of the deals that we've been working through, whereas before there were little to no concessions, heavy rent escalators, and the very low availability of no product. In 2025, we're optimistic that is going to break loose and we're going to have more options for both buyers and tenants out there for industrial product. Self-storage saw a sharp decline in asset purchases. Cap rates generally did not align with seller expectations. Most buyers that are subject to the debt markets just could not make some sub-6, even sub-7 cap rates work. And we're just faced with negative leverage if they move forward on a deal like that. And sellers, of course, have these wonderfully performing assets and are not motivated to sell at a lower number than what traded in, say, 2021 or 2022. So very far apart. The ask bid gap was apart. We're starting to see it close in. So we're optimistic in 2025. We're going to have some stabilization in the capital markets. So more investors know moving forward where interest rates are going to stabilize and where deals can get done. And we're going to see some of those legacy self-storage operators maybe more apt to move on and hopefully start seeing sale activity pick up. Likewise, development dropped off as well. Land prices and cost of construction and declining rents or leveling off in terms of rent growth made new developments really challenging for self-storage operators and developers and expansions and things like that. We're optimistic with costs of materials becoming more competitive. Hopefully more labor, greater labor force moving into our market, that we're going to see some softening in some of those construction costs, and hopefully development will pick back up in 2025.